folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, and it's a TGIF, folks. Market-wise, let's take a look at it out here. You have the Dow down 34, NASDAQ off 16, S&Ps are off $1.50. Gold's up $12.20, trading at $1,295. You get silver flat at $20.31. Platinum, $1,462. Oil down 62 cents at $97.55 a barrel. Bonds, folks, are just a wild trip in itself. You had the 10 and the 30-year reject lower price yesterday. Bottom line today, what do? They go topside once again. You get the 10-year up 20 ticks at 125.08. 30-year up 19 ticks at 138. King dollar off of $1.38 at 81.35. You get the euro up 37 at 134, and the yen's trading at 102.56. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. It's going to be a tough week next week, folks. We are at 1927. We hit 1916. You're going to have volume behind the move. We had it yesterday in an extraordinary way, 926 million. We're going to get the volume out here again today, coming into the close. If we take a look at the SPY and you want to see the correlation inside that, this is what you have. Yesterday, we did 165, I think. Yeah, we did 183 million yesterday on the SPY on the way down. We've already done 150 million. What that's going to do on the weekly basis is just do some heavy destruction. Weekly, thus far, we've done 588 million. 588 million. That's after making a high with 334 million. The writing's on the wall here. What is the writing? The writing is on the SPY. The benchmark is February 5th. And the low of February 5th that week is 173. The high is 179. So that number, man, that's a big number from where we are right now, folks. If we go actually look at the cash S&P, what you're going to see with that number is it's pretty amazing, actually. It's 1737. So you're talking a long way down from where we are right now. NASDAQ Composite. What do we have with the Composite? So the Composite, folks, came inside the lower range yesterday. Closed right inside it. We closed yesterday at 43.67. Well, once you got inside 43.71, what it puts game on for is what? It puts game on for 39.46. That's another 404 points down. 404 points. We're only down 15 right now. It has broken all the swing points going back from June 20th. Broke it with volume. If we take a look at the NDX 100, which has been one of the strongest indices out there, NDX 100 right now came down yesterday with 50 million shares. Today we've already done 54 million. So you get volume coming off the highs. You're going into the swing point. The first swing point was the 17th of June. That swing point low was 94.32. We've hit 94.04 today. We've already broken the swing point. Did it with volume. Daily's done it with volume. Weekly's done it with volume. Bottom line, when you take a look at this, the Qs are at 94. Next stop is 89. That's on the daily. You put this on a weekly, and this is where it turns into a real disaster. On the weekly, it turns into 83. Yeah, 83 is game, which is 10 points down. Small caps. We go take a look at the small caps out here. What you have with the small caps, we'll use the IWM. We're taking a look at that small cap. Small caps out here just have no breath whatsoever. Down 60. We're at 110.59. Your benchmark out there is the top of the benchmark. So check this out. This is pretty sick. The top of the benchmark, okay, is at 109.21. And that is, we're going to open up next week, folks, sitting right there, okay? So what that means, okay, this is pretty intense. What that means is you're going to build cause to blow away this whole area. Now, The IWM blows this away, folks, okay? What that would set up on the IWM is an IWM trading out at 87. If we take a look and we go look at where 87 is, inside the context of the IWM, 87 is going to be the highs of April of 2011, the highs of July of 07. That's how dramatic it is. And how we get back into that area is a huge number, meaning do you come back into that number and do you come back into that number with volume? Now, let's get over and take a look at that bond market. We'll start with the 10-year bond first. We take a look at the 10-year. 10-year out here, wide price spread, accelerated volume. I mean, the bond market, folks, is just a mind blower. And the rates are going down, folks. You're going to see a 2% 10-year. What do you have out here today? Monster expansion. We've done 2 million contracts out here. I don't remember when the 10 years done 2 million contracts. What you have out here is that 126 is your swing point. We're at 125.08. You know, 132 is, 126. Or 128 will be the next stop. Bonds are going up. In fact, their ABC structure's on the way up. We go take a look at the 30-year bond. What the 30-year bond has done is this. 30-year had 583,000 contracts out here today. Same deal, monster volume. The 30-year has already taken out its B point with volume. That B point, folks, was the 138.10. You know, we hit 138.13 today. Monster volume. When you're talking about volume, it's monster volume out here. We had a question in the den about the TLT. The TLT, folks, is the 20-year plus bond fund, okay? When you take a look at it, put it on a weekly. I did this morning at the 10 o'clock show. It's an ABC structure on the way up, and it's a monster, by the way, okay? It's a confirmed ABC up on the weekly, on the monthly, and all of the above. Your A point on this is 105. Your B point is 115. So it's a 10-point ABC. You're going to see 120 in the TLT, and 120 is the lows of the highs of May of 2013. We take a look at the fundamental yield on it. Yield right now is 2.5. Let's go to Victor in Paramus. Hey, Victor, what's going on? Okay, so he wanted to look at a WPRT, which is Westport Innovations. That's natural gas. They produce natural gas engines and fuel systems. The low is $12. The high is $33. We take a look at this, and don't touch this. That's the bottom line. This little baby will, you know, you have some volume in it today, not a huge amount, but where this broke out from the low, this is going to be a classic of going all the way back to that low, which we're at 1542. That, the break when on May 2nd goes from 1350 to 1625, does it with 7.1 million. This will come all the way back down to $13.14. Gold contract. We go to gold. You talk about little volatility, little action. Gold has it all, folks. So gold had a monster sign of strength June 19th. June 19th, we go from 1277 to 1322. You do that with huge volume. Guess what? We pulled back lighter volume today, rejected lower price, had price spread coming into it. We're at 1295.60. Any close over 1294.40 keeps it in the larger range. What does that mean? That means you're going after the 1347, and what's still wide open is the 1391. What is intriguing here, folks, inside the gold market, on this downdraft, when you take a look at the S&Ps, the NASDAQ, and the small caps, is that gold held today. You know, most times when you have the market get smoked, gold gets smoked too. You know, if you've learned anything in the 2006, 2007 debacle out here, gold went from 1,033 down to 666. So it's impressive that it could hold up today. And I expect that it is going to hold up, by the way. The dynamic inside it as to why, you know, just means that more people are buying it. There's not many people that are into it, or there's too many people that were short the position, and as it's going up. The bigger position, and I suspect what's really pushing gold, is that since April of 2011, this is the first time that the GLD, on a consistent basis, is buying almost every night. That phenomenon started again about 6 weeks ago, and it hadn't been going on for over 2.5 years. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Right now, you get the Dow off 27, Nasdaq off 12, S&Ps are off $1.50. And when you do look at the E-mini, folks, okay, we were talking about this yesterday. It was a intraday ABC structure on the way down. Your price point on that, A to B equals C to D, was 1913. We hit 1910 this morning. So now, where did we stand from now? This is what you have. Each and every rally, folks, you're going to see it get up to ice. You'll see it come into a down draft that had been out there, and it will give it up again. Today's been like a little trader's paradise out here. We got up to 1925, it spikes to 1932 and then goes all the way right back down to 1910. Spikes again. Next time up, got you to 1926. We're at 1924 right now. I suspect coming into this close out here, we're going to be coming into the close and basically closing out around 1915, which is $9 down from where we are right now. Now, what is intriguing is this. So check this out. That's on a technical basis. We know on fundamental basis how folks come in the market, meaning that how many people actually come in the market, when they come in the market, and what does it mean? Meaning, is there euphoria out here, and how does it come into the marketplace? So check this out. This is pretty amazing. The ETF, the SPY, last week, okay, actually, no, whatever the cause, it was last week. Last week, the most amount of money was put in the SPY since September of 2011. And, of course, bottom line, if you're looking at this chart of mine, needless to say, most amount of people go in there, guess what? It goes south, and it goes south ASAP. There was $7.6 billion put in there last week. Now, check, this is what's even intense about it also. That number was the highest number since September of 2011. Now, watch when you see, I'm going to bring you up to September of 2011, because the money that was put in September of 2011, big money was made, okay? But I want to show you what actually happened there. So if we take a look, we do a 5-year chart, and you take a look and you put September of 2011, what you're going to see is it looks like the downdraft had occurred. The SPY was trading at 136, May, June, July. August, you had the downdraft. It was quite a downdraft. We went from 1340 in the S&P down at 1150. The money was put to work on a counter-trend bounce. It looks like somewhere up about 123. Well, for the next 6 weeks, you did go down. Not dramatically, but you went down. So we went from 123 down to 107, which is not what's that, 15% down. So it's going to be interesting to see, okay, that $7.6 billion that was put to work, is everyone piling in once again at the highs. And that's how it normally happens, folks. It's hard to believe that that's how markets move, but it's just bizarre that what ends up happening is that things are up for so long. That's when people go back in the market after they get out at lows. And, it's over and over and over again. I mean, it's just, the odds of hitting a lottery, I think, are better than what ends up happening with the market with people over and over again. That's how it goes, So anyway, take it for what it's worth, but that is also saying that you have folks that are in at the highs again. We have high volume off the highs again, and it's going to be monster volume this week, by the way. Right now, we're dealing on any of them. When you put the SPY up, when you put the Qs up, when you put the diamonds up, they're all high volume highs. If you go to the XLE just got taken apart. You talk about 18 hours. 18 hours just took the XLE back to April 21st with monster volume. If we take a look at this XLE, you put this on a couple-year weekly basis, what you're going to see out here is we made a high. The first high we made out there was 55 million. That was 101.52. We tested with 32 million, and this week we're already 58 million. So we're going to do something like 60 million. The XLE is trading 96. That baby wants to get down to 84. The numbers that we have below us, where these markets want to trade, folks, are pretty dramatic. That's the first part. Second part's even larger, though, because how we come down doesn't necessarily mean that those numbers, that these benchmarks that we're talking about, will hold. That's all they are, is a benchmark. They're high volume spikes where we went over them, markets come right back to them. The key is how many people are going to be holding the bag as we go down into those levels. If the volume accelerates like it has this week, this month, and we do that this coming month, which I expect we're going to, get out of the way, because there's some destruction out here that can be had, and it looks like to me that it's going to be very fast destruction. inside the XLE, as soon as we get back inside 91.42, that puts game down to 63. So that's a big move on the way down, particularly about how we've been higher. And that, if you're looking at any of your charts, what you want to be looking at is this. You want to look at how you took out the March highs. Most of them are March highs of last year. Did you take them out with volume or no volume? Most of them have taken out with no volume. If you get back inside those, then you want to look at the lowest price inside that last trend, because that's where you're going. You can't bust them up. Guess what? You're going to bust them downtown. Some of the high volume stocks we have out here today, let's see what we're looking at. You get Bank of America down 24 cents. Microsoft's off 33, no big deal. JP Morgan's off a buck. I do want to go look at JP Morgan, because what did happen yesterday is the financials started to crack yesterday. And they have been taking a long time to crack. We look at JP Morgan. Yeah, she's going to need more volume. I mean, she just came down off of 59. She's at 56, but she is going to need more volume. That's on the daily. Let me see this on the weekly. Oh, I got it. Okay, so check it out now. JP Morgan's going south. So on a weekly basis, what do we do? JP Morgan came down hard the week of April 11th. Went from 60 to 54. You did 128 million shares. We tested that area with 50 million. So 50 million was testing 128 million. You're off that area again with 73 million. So check it out. You're down with volume, wide price spread. You do the counter trend bounce, you get up, and you did 50 million versus 128. That's less than what that's 40% of the volume. That's not even close. Then what do? Then you get the confirmation once again that as you're going south again, what do you have? Wide price spread, expanded, accelerated volume once again. That sets up that JP Morgan wants to run down to 52 to 50. 52 to 50 is the benchmark from September of 2013. That's on your weekly. We take a look at JP Morgan on the monthly. What we have on the monthly is at $44 a screaming. And when this overtook $44 and 44 bucks is screaming out there. That's an intense move, if in fact that's what we get out here. Dow finished, the Dow is down 32, NASDAQ off 15, S&P's off a couple. We're at 3:29 Eastern Time. You can expect a rough close coming in here, folks, okay? The DAX closed at its lows, had made its way back pretty good, and then see ya, don't want to be ya. We'll come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, folks, 877-927-6648. And folks, if you'd like to test drive my daily newsletter, Market Insights, you can do that absolutely free. The way you do it, come over to our website at TFNN. You go into newsletters, trading newsletters. You can test drive Market Insights 2 weeks absolutely free. If you'd like to test drive the Gold Report, that would be newsletters, investments newsletters. The Gold Report, you can test drive that for 30 days absolutely free. Market-wise out here, let's take a look at it. Okay, so you're down 37 right now. The S&Ps are off 250. If we go into the S&Ps and we take a look at them, this is what we're looking at. This is the mini S&P we're looking at. I'm going to put this on a 2-day, and what I suspect we're going to get coming into the close here. This morning at, this afternoon at 13:20 hours, you went from 1915 to 1922. We're going to be down there at 1915.50, folks. That's what's going to try to make its way back into. That's where I expect we're going to close out. And what you're going to get, you get that or lower. That's what it comes down to. And what you're going to see, because the correlation, that's a normal trading range once you got destroyed like we did yesterday. first off, particularly because the markets try to make it back 3 different times today. Well, yeah, 3 different times. And that's absolutely awesome, for traders. Bottom line, each and every time the spike gets up, dramatically lighter volume, gives it up. You back down a little, volume goes up. Now, the correlation, I'm going to go right over to the DAX because the correlation is the DAX. The DAX out here today closed at its low, 92.10. But check out what it had done. If I take a look at this DAX, the DAX had been down at 91.95. That was when their market was open a couple hours. Made a nice counter trend bounce. 91.95 was the low out there, 91.85. Then bounces all the way up to 92.90. That's 100 points up. Then gets actually higher to 93.04. So that expansion from 93.04 from, let's say, the 101 expansion on the way up, huge expansion, gave back all of it coming right into the close. Ended up being down 197 points. So as we commit to the Friday, the weekend, I suspect we're going to have the same type of sell-off. What we do have here is that the NYSE has already done 543 million shares. So there's going to be high volume once again. NASDAQ has done 1.718 billion shares. Some of the large caps inside here, let's go look inside the Dow Industrials and see what's driving it up versus driving it down. What's giving it some juice out here today is Procter & Gamble. That's up 267. GE's a dead cat dog. That's up 18 cents. Pfizer is up 20 cents. And United Health is up 55. Taken away from it, this is important, really important. You got JP Morgan, which is down 112 at 56.55. Goldman's getting smacked around. That's down 242. American Express is off $1.15. And Big Blue, which is the largest weighting inside the Dow Industrials, you basically, that's a large weight, and that's down 234. So that is a big number on the way down. Inside the NDX 100, this is what we have inside the NDX 100. Taking points away from it, you have Akamai Technology, that's down 195. Vipul Communications down 35. Bed Bath & Beyond is down 166, and Discover Networks is down 193. Putting juice into the NDX 100 is Expedia, up $5. That travel business, they're getting a fortune for airfare, no doubt, and they're making money hand over fist. Tesla is up 10.57. You have Monster Beverage up 144, and Kraft Foods is up 118. And we do take a look at this. Come on, baby. When we take a look at Kraft Foods, you talk about a dead cat bounce. Kraft Foods absolutely got killed, folks. Kraft Foods went from $61. It was trading at 53 yesterday. It's a dead cat bounce. What you're going to have with Kraft Foods is you're going to have a high volume, daily, weekly, monthly, all of the above. What Kraft Foods has just done in 2 weeks is that it gave back more than a year. You talk about the elevator on the way down. Man, this is a trip. So check this out. In 2 weeks, Kraft literally gave back to May of 2013. When you have tops that are going sideways with lighter volume for long periods of time, folks, just get out, okay? Because all that is distribution. Stocks are being held up, distribution on a huge basis. Once the operators are out of the stocks, guess what? There's no bids on the other side on the way down because they've cleaned their positions, and that's it, all said and done. XAU, the HUI inside the gold market out here, this is what you have. They're both inside the range. That is the higher range. The XAU is at 99.24 right now, and what that puts in play, once again, these highs that are out here that were generated in March, the XAU, that's 107.39. The HUI, Gold Bugs Index, that is trading at 237, and what that puts in play is that 267, I think it is. Yeah, 261. That puts in play the 261, and that consolidation is still in play. We've been in this consolidation in both the XAU, the HUI, since June 19th. And as I said a little bit earlier in the last segment is that the market not smoking gold and silver on a Friday with a down market is saying quite a bit. We go take a look at Walmart. What we have with Walmart, folks, is making its way back into, it's about another 2 points. If Walmart gets inside those couple points, then I got to tell you, you want to really watch this whole market. Why? Because it took 12 years for Walmart to break out of the $70.25 level. We broke out with lighter volume. If she comes back in it, it doesn't necessarily just send it to the bottom of its consolidation. That can send it to the lows, period. So it's like, okay, what's going on with Walmart? Is someone going to be eating Walmart's pie? You know, I don't think it's going to be Amazon. But what has happened and what does happen is that everyone's getting used to packages just showing up. Amazon right now is at 307. And Amazon itself, folks, Amazon had made its low first in 2007, 2008. And it looks to me like that was the first one, when we look back, that actually was ringing the bell at the highs. Amazon rang that bell 25% higher, off $408.65, and that was right at the first of the year. We came down with volume, did expansion with lighter volume. You get, the way that this looks to me is like you get a large ABC structure on the way down. It's a 105-point ABC structure, which would get you about 270 A to B equals C to D. But this can go to 125. This can go to some outrageous prices. And of course, what you do have with Amazon is that they have a problem making money, but they do take in huge amounts of cash flow. The cash flow is absolutely extraordinary. It's getting bigger every day. The key is going to be is he going to stop building for a few quarters to say, okay, we can make money. Right now he's pushing the tune of $90 billion, and next year they look to take in $109 billion. So you're talking about big numbers. King Dollar. What do we have with King Dollar? Okay, so King Dollar out here, she's building more cars. You already did another ABC structure on the way up. Hit your price point, which is the 81.50. We actually hit 81.64. And if I put this on a continuous contract, what you're going to see is that King Dollar right now, I'm going to put it on a 10-year monthly. So King Dollar, next stop is 84.85, 84.50. This very well can be an ABC structure on the way up, too. If it is, 72 is your 8 point, 84, so it's $12, which gives you 78, 88. It gives you a 90. That's where we're going. That's what this is. So check this out. Your spike in 2009 is 89.70. More than likely what we have here, we've been in this consolidation. And that consolidation that the dollar index has been in goes all the way back to May of 2012. This A to B equals C to D will get you to $90. $90, folks. We'll see how we first attack the 84.96, but $90 would be a total mind blower, because what you would have, let me just see something. See, I think you probably could make the case. We put this on a 10-year. I'll put it on a 15-year. Okay, so I have this on a 15-year right now. And if it's going to go, oh, it's going to be cool. Okay, so we're going to be able to tell how we come into this channel line that was developed from the 89.70 in 2009 is going to tell us, bottom line is that, number one, do you have an ABC structure on the way up? And number two, are we going to make it up to that 90? Because if you make it up to 90, oh, baby, you build some cars there, then the game could really be on. And the game I'm talking then, see, if you go over 89.90, you can stick. There's nothing in the way, because we came down from 121 to 70. It was non-stop from 121 to 90. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming into the close. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien. Welcome back, folks. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. You get all of that programming right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV with the charts as well as the audio, just go to TFNN.com. You're going to see on the right-hand side, you'll see the TV right there. Hit that TV, the charts and the audio will get delivered to you. Market-wise, right now, you get the Dow off 73, Nasdaq's off 20, S&Ps are off 6. If we go take a look at this E-mini for a second, you're going to see this expand as we get into this close right here, folks. ESU FOA. So what you have here, I'm going to put this on a 2-day so you can see where this checks out. Right now, we're at 1918, and what happens at 1918 is that you're inside the bar. And that's where I come back with that 1950.50, folks. That's the bottom of the bar where we had gone topside at the 1320 hours. That's where that shakes out. Markets love to do that anyway. When you have trading markets, which we do right now, it's fast, it's furious, and bottom line is that you got to remember that 1913 was the number. On the way down, we hit the 1910, so I suspect we're going to get in there somewhere. Now, we had a question in the den about the minus 1400 on the tick. Okay, so let's go over what makes a bottom first. First, you got to go into the trend, TRIN. What the trend is, that's a short-term trading ARMS index. Right now, we're not even close. We're not even close because on a 5-day right now, you're still dealing with 1, 2, 3. You're dealing with 450. When you start getting down to 3 to 320, now you're talking. And in this particular case, so check this out. This is what's so bizarre about this. Right now, we're at 0.95. 0.95, folks, means that there's many people on both sides buying and selling. That is not how bottoms get made. So first you need that to get down there. Now let's talk about the tick. What is the tick? The tick, folks, is based on the amount of folks that are selling simultaneously. And they're selling within 1 second. What we got out here today is that you did get a minus 1435, and that would be a beginning. There's no doubt about that, meaning a beginning of a downdraft. But you need 2 of them. Now, this is what's really cool, too, so check this out, though. But what is negating this, and this is where you got to get used to how these things work, is that we also got a plus 1143. That blows the whole thing out on the way down, because what you had is that the expansion on the way back up is that the greed come right back in. Folks were buying right into this morning when that market, the jobs number come out. They were buying into it. They got basically trashed again. They come back down, and we're going to see how this shakes out in the next 7 minutes. But what you do have is that you need those. So if you're going to use that gauge, you want the trend, 5-day trend being down 3, 3.25. You want 2 separate ticks without a plus 1,000 inside of that at minus 1,400. Second one maybe minus 12 something. And what you also need, though, is a rejection of price with lighter volume. And we're not going to get any of that this week. What you have, and it's real easy, of course, gauging it with only a few minutes left in the marketplace, but all day long, you can see that we were going to have a high volume daily, a high volume weekly. We've already had a high volume monthly. So I suspect, and in fact, what you have is that you have the aspect that Europe closed at its lows. If we go over to the FTSE for a second, Europe wants to gap down on Monday, folks. The FTSE blew away its swing point. Swing point we're talking about is 66.43. FTSE's on its way down to 6,400, and right now you're at 66.49. The indices in general, you had the DAX down 2.1%. Spain was off 1.8. The CAT was off 1. If you want to take a look at these bonds, folks, the correlation, number one, technically, they want to go topside in a huge way. Fundamentally, we are at 2.49, so much for the bond market going south. It's not even close. And that 2.49, again, when you look at it on an aspect of fundamentally, what you have is that, do you want to lend the United States at 2.49, or do you want to go over in France and give it to them for 1.5? Maybe Germany, 1.1. Italy, 2.7. Italy's a great place to go. They don't have any money. You can see the competition out here. If I wasn't even a technical trader, just based on these countries and what the countries are paying interest at, it'd be like, I'd look at this and say, okay, do I really want to go to Italy and give Italy money at 2.7 when we're paying 2.4? Or Spain at 2.5? There's no way. There's no way. It's not even close, folks, okay? I'll go to Portugal. Their biggest bank just went south. Give it to them for 3.6. That's like insanity. But what that is the amount of cash that's across the world that's looking for a place to be, to at least try to get their principal back. That's what you have happening out here. That's what the correlation is that's going on inside that bond market. Well, it's one of the correlations that's going on inside that bond market. What I expect we're going to have here, you're going to have 6 weeks of heavy markets, maybe 7 weeks, 8 weeks, okay? It's going to be a nasty little market as we're coming down. The nastier it gets, folks, the more amount of money that's going to flow out of the equities into bonds for a safe haven for a certain amount of time. If you are and have been able to take advantage of this expansion on the way up, guess what? Don't just sit there. That's the bottom line. Put a stop in. Do something. Don't look back 3 months from now and say, oh, my God, we actually did get a correction. That correction was 20, 25%. Doesn't mean that it has to go all the way back up to the highs, folks. What we're going to have out here, by the way, okay, is that we don't have any high-volume highs out here. We have low-volume highs. So what you're going to get out of this is that we're coming down with volume. We'll see if, in fact, the market can save itself once again. I mean, that would be the next question, and a legitimate question, by the way, from listeners saying, hey, we've seen this before. It turns around, just shakes everything off and comes all the way back up. We'll see how that shakes out. Markets, folks, basically correct all the time. That's a natural phenomenon in markets, no matter how much money is put in by anyone. That's the key. Why is that the key? That's the key, folks, because when big money is up big money, do you think they're going to sit there? No way. That's what makes big money. They're going to take it, they shuffle it, and put it somewhere else. They sit on it, let the correction come in, then they come back in again. You stay right there, folks. We're going to be coming back with our man, Mr. Dave White, our technology expert at TFNN. We have the hour right now on 70, NASDAQ off 17, S&Ps are off 5. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. And as we do each and every Friday, got our technology expert with us here, our man Dave White at TFNN. We're going to be rocking and rolling, talking technology. But first, we're going to talk these markets. Let's take a look at one of our cards. Now, this is a quote by Chuck Knox. I think he was a football coach, wasn't he? I think he was a football coach. Always have a plan and believe in it. Nothing good happens by accident. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We ended out down 69. NASDAQ off 17. S&P's off 6.5. Gold contract up $12.10, traded at $1,295 an ounce. Silver flat at $20.37 an ounce. Platinum up $1 at $1,462 an ounce. Light sweet crude down 50 cents at $97.61 a barrel. Bonds. The bond market, folks, exploded topside. The 10-year up 21.6. I believe we did 2 million contracts on the 10-year, which I've never seen the 10-year do 2 million, but I'll bring this up when I bisect and dissect it. 125.09. That baby's on the way to 128. The 30-year did 23 ticks, also monster volume. We're at 138.04. King dollar down 113 ticks at 81.40. The yen, the euro rather, up 34 at 134.23, and the yen down 21 at 102.97. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, what do you have? You're at 1925. .55. What do we have? Volume. Huge expansion of volume. Yesterday you did 900 million. Today we did 760. On the weekly basis, what you're going to see is that daily expansion of volume, the weekly expansion of volume. I put up the SPY. The SPY did 185 million shares yesterday, 177 million today. That's on your daily. Your weekly is just a monster. The weekly, folks, basically gave back, let's see, 2 months. 2 months and 5 days. 5 days it took to give back 2 months. The reality, it actually only gave back, it took 13 hours. Yeah. Yesterday and today. And how do we do it? We came down, so we have volume off the high now at 613 million. What's the next stop? Next stop, folks, is 179 to 173. That's a long way down, isn't it?
It's a huge way down. But in the scheme of things,
yeah,
as in normal retracement,
right?
It's not anything, is it? I mean,
no,
it's not. It's not. A long way to even get down there. Everybody's going to scream and cry, and if it bounces at that point, they won't be able to buy it because they'll think it went so far down they couldn't buy it.
But that's a normal retracement. You're right. No, I know, and it's folks,
and it's going to drive people batty.
And it's because we went up so dramatically. There's no doubt about that. I mean, you can make the argument that, hey, that only gets us back to February of 2014. That's a valid argument. There's no doubt. I mean, I wouldn't take it because your money's at risk the whole time up there. You know what I mean? And it's like, and that's that's only a benchmark, folks. Doesn't mean you have to stop there. That's the other side of that deal. Okay, Dow Industrials. We take a look at the Dow. Dow Industrials out here. She came down hard. She's at 16,494, and what that does, that brings you for the Dow. It actually puts the Dow in a losing position for the year. We take this and we put this on a monthly basis, and the way that the Dow is set up is that we'll see whether the 14,195 is out there. But if we get that, if we come back inside that lower range, which by the way, when we took it out in March of 2013 with lighter volume everywhere, because we're going to get Rick from British Columbia on here, because what would end up happening, and this heads and shoulders all over the place, folks, in markets. So you don't want to speculate on what you are making, but if we came down like that, that'd be a beautiful head, man.
It would.
That'd be a sick-looking head.
We're starting to see some weakness, at least in some of those that weren't like Caterpillar. IBM had a hard day today.
Yes.
And those are the ones I'm kind of looking at already as what we're going to see in the next week.
No, there's no doubt. Now, NASDAQ Composite. What do we do with the Composite? The Composite, folks, has been the strongest indice, and this gave it up in spades. And what it did is this. We're at 42.52. That got us inside the lower range from March of 2014. What had happened is that when we had taken that out in June, you took it out with lighter volume. So it's a false break topside. Guess what? You come back inside that range. What that says for the Composite is that now we got game down to 3946, which is another big number. That's 400 points down.
Yeah, I was watching some of the, what I call financial infotainment TV, the cable TV, and everybody was still talking about what they were going to buy. So I'm feeling pretty good about it.
There's no doubt. And I suspect what Dave is talking about there is that when the aspect is that they're still going to buy, that is the aspect that we're still going south. What ends up happening, and this is easier to hit the lottery than really what happens, right? What happens at lows, folks, is that no one will buy. And you hear them on there saying, okay, now we're going to teach you how to go short the market. Yeah, right? I mean, that's the reality. Gold contract. Let's go look at gold. So gold today, specifically for a Friday, folks, in a down market, I like what it did. It closed at 1295.10, up 1250, 1230 rather, and it closed inside the range, the higher range. That higher range is 1294.40. We were coming into the sign of strength that had been out there since June 19th. June 19th, we went from 1277 to 1322. Had volume behind the move, pull back with lighter volume. What I do want to see is another day of strength. That's what we need to really get back inside that range, but that's what we're looking for. Now, let's talk bonds. Is bonds bizarre or what?
I've been watching that TBT. It's been down there with light volume, and I've been, why? Well, it was off 46 cents or so today.
The TBT, folks, is a monster ABC up. Confirmed, by the way, with volume. Now, look at this. This is sick. The 10-year today did 2.1 million contracts. That's insanity. That's a big number. It took everything back from the downdraft that had been created on Wednesday. Wednesday it started at 125.13 and went down to 124.14. Now it came down on 1.8 million contracts. It had never hit a swing point. Folks, that's where the markets talk, walk, and squawk. And in the 10 years case, the swing point was at 123.25. You got to 124.07. That was saying quite a bit right there. Then what ends up happening? Boom. It goes topside, catches the shots on the wrong side, evidently. That's why, it caught a lot of people on the wrong side. What I think you're going to see here, that the 10-year hasn't confirmed the ABC structure on the way up. It is closed, however, right at the highs. I suspect what we're going to see next week as the S&P goes south, these bonds are going to go north in a huge way. 128 is game. 126 is the B point of an ABC structure on the way up. We go over to the 30-year, and the 30-year has just been screaming for quite a while. 30-year, the B point on the 30-year is 138.10. We did 600,000 contracts today, and that's after coming down with 502. Isn't it bizarre, though? It really is.
Well, even in the general market, we had probably the best volume in a year on Friday, other than one day when there was a big expiration move and rebalancing at the end.
Right.
There's only, I think, been one higher volume in August.
Right. Yeah, in August. By the way.
Yeah.
It's August. It's hard to believe it's August, man.
It is. But we should be having light volume on Fridays. And today was gangbusters volumes. There's no way about it.
No, there's no the bailout was happening, folks. And bottom line is that if you have been long and strong, well, just get stops in. You don't. It's your choice. You don't have to get out. But guess what? Don't give back the house, because this house is. The rats are running. The rats have already actually run off the ship. I had brought this up in the last hour, and Dave had brought up in his show that the margin interest. You're saying the margin interest is the highest.
I'll get that chart up during the break.
Okay.
We'll see it. But yes, it's higher than it was in 2007. And this guy had the chart, and I saw it earlier. I showed it this week on the show.
Yeah.
But it's even higher because his data was like 2 weeks old, and it had even gone higher. We'll show it when we come back.
Beautiful thing. Dave White, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Don't forget, you can listen to Dave each and every trading day right here at TFNN, 2 to 3 Eastern Standard Time. Dave and I are coming right back, folks. You stay right there.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. And don't forget, folks, Dave not only is on each and every trading day, 2 to 3 Eastern Standard Time. He has 2 great newsletters. You can come over to our website at TFNN. You go into newsletters. Go under investment newsletters. You can test drive the Tech Insider right here, right now. 30 days, absolutely free. What we have up on the screen is that we have the New York margin debt and the S&P real values adjusted for present U.S. dollars. And this is a pretty incredible chart, Dave.
You don't want to be... There's got to be somebody on the other side to buy yours. And if they've already gone full margin, right, how are they going to get any more cash to buy what you got?
Right. And so, folks, if you're driving in your car right now, this is what Dave and I are looking at. And all the Tigers and Tigresses that are watching Tiger TV. And, of course, you can get Tiger TV, but just go to TFNN. You'll see the TV on the right-hand side. Just click the button. So... in 1999, the blue line is the S&P. The red line is the New York Stock Exchange margin debt. And you'll see that 1999, you have the S&P at highs, and the amount of margin, the amount of debt in the NYSE is exponential, too, not in a small way. It went from, I think that's 200 billion probably to 400 billion, right? We're probably looking at billions, right? Okay. So it went that dramatically in the course of only 1 year. Then what ended up happening? Well, guess what? You went from 380 billion down to 170, and the market went from, the S&P went from 2,000 to 1,200, 1,260. Yep. Then what happens? Okay, that's 2002. 2002 to 2007, we expand higher again. And what's pretty incredible is this, is actually really incredible, is that the NYSE didn't go up that much. It didn't get to the highs, but yet the margin debt exploded. The margin debt, folks, went from 170 up to 440 billion. And then the crash of crashes come, okay? The bottom line, we get out to 2008, 2009. Now what has happened? The margin debt is
higher than ever.
Higher than ever by a huge way.
Boy,
not in a small way.
And this chart was 2 weeks ago, and it's actually gone higher with the last report on that. So, yeah, if you're watching at home or in the car, we've got two charts. We basically have two lines. One is the S&P cash print and the New York Stock Exchange margin debt over it. But what you do see most of the time, you didn't see it in the .com phrase because everybody was putting cash into the NASDAQ. But it was still way up there.
Yes.
Okay. But the last two times, everybody's felt that they could get into big name stocks that were safe.
The safe ones. They're all safe.
Safe ones. And then really go full margin tilt. And, of course, every time you see people go full margin tilt, the market is ready to just grab that rug and pull it out from underneath you.
And unfortunately, and we're only kidding, folks, there's nothing safe in the market.
Right.
We know that. And what does happen, mathematically, when you leverage up like that, when you leverage at highs, folks, it's pretty bad. Because it only has to pull back slightly. And
you get the ripple effect. Everybody sells, they have to sell.
They have to sell.
And all that margin starts coming back out.
And it comes back very quickly. In fact, if we look at, let me just see something. If we look at the aspect just right now on the S&P this week, it's going to be pretty intense. Because this week, when you're looking at it, sure, 5 days ago, yeah, 5 days ago we were at, yeah, that's a big move. 5 days ago you're at 198 on the SPY, or at 192. So you're talking $6,000, which is pretty intense. You know what I mean?
So
okay, so hey, let's get into some stuff. You get some neat stuff this week, man.
We do. It's a big week for technology out here, and we're into it. But
so now I'm looking at a curved screen.
Right. You've seen the ads for Samsung and their curved screens.
Yes.
Okay. Those were fixed. They were curve fixed. This is the one that we've been talking about for probably a year and a half, where they spent $1.5 billion to build a graphene display factory in Korea. Now, they put this up for sale in Korea yesterday. It'll be for sale here in the fall.
Really?
No prices yet.
Yeah.
This one's an 80-inch TV. But instead of just being curved, it actually will curve towards you, and the idea is, depending on how far you are away from it, it'll curve around you, so
it'll engulf you.
It'll engulf you, like a Omnimax.
Yeah,
if you go to one of those big theaters.
Wow.
So they're trying to bring that kind of experience here, but of course, nobody with glass could bend glass like that, or even plastic without it breaking. And we've been talking about just how these graphene screens are really going to affect the market.
Sure.
This is the first really big thing that graphene has produced that it's going to be on the market. And again, we're probably looking at probably September, maybe 1st of October here in the States.
For Christmas, they'll try to do
they'll be out for Christmas.
Yeah.
It's a 4K resolution monitor. I'm sure it's going to be big bucks, but probably within a year where we're going to see these things drop back down to the consumer level.
Let me ask you something. On the 4K, I was looking at that. So the 4K, but then you need programming that's 4K too, right? That's what the problem is, right? Because there's not a lot of programming that's 4K, right?
That's correct. Now, Netflix is talking about it, and a few other people
I love
talking
Netflix.
about it.
I'm telling you, Netflix blows my mind.
The question is whether or not you're ever going to be able to get that kind of bandwidth through Netflix from your ISP, though.
So you need even more bandwidth for the 4K too?
You need 4 times as much.
Oh, is that what it does? Is that what those numbers mean? I got it.
I mean, when we talk about TV that we grew up with, to go to HD TV, 4 times the bandwidth. Okay?
Yes.
HD TV to the high def 4K, 4 times. So we're now 16 times a regular video. Now, it's going to be compressed, and there are some new compression techniques that make it a little less than that 16.
Yeah.
But it's called H264. It's a new standard for compressing video, kind of like MPEG 3s and everything else.
Yes.
It helps So it's not quite that bad.
That's pretty cool.
But it's going to be a lot of data coming across.
Do you watch Netflix? Do you have Netflix?
Yes, I got Netflix.
And you have cable too, right?
Yes. I've got to.
Wouldn't it be great to cut the cable? I know. It's amazing.
If we're in financial professionals, you got to have Bloomberg. And
I know that. I know.
And you can't, even on the base package, you're $50 a month, right?
I know.
There's no way to get around it.
Right.
But
it's just so funny because Netflix is such a deal. It's like $8.
You know, I know we're getting close because CNBC, I can log on and watch it now off of cable and away from my house. They finally figured that out.
Right.
Now, Bloomberg has a radio app, so if I want to in the morning, I can listen to it while I'm walking around. But for the most part, you're still, if you're talking about those big cable shows where people make news maybe in the morning or something, you want to take a look.
You know what I love on CNBC? American Greed. It blows me. I'm not kidding, folks. If you haven't seen CNBC at night, that American Greed is really great because it's hard to believe that Ponzi scheme after Ponzi scheme can happen. But they do, and they're all different takes. And it's all, folks, if someone comes into you and the deal's too good, it is too good. It's always, it's amazing. It's amazing the amount of.
I love the guy last night because he was.
I watched him.
He was in the meeting room and scammed his way into the meeting room and then grabbed the guy and act like he worked there. And I love that part of it. Of course, they busted him and hauled him off to jail.
Oh yeah,
they all end the same way.
They all end the same way. It's amazing. Dave White, Tom O'Brien, you stay right there, folks. We'll be coming right back. Our phone number is 877-927-6648. You're traveling the roads out there, folks. Be safe. You're traveling down the Cape. You're traveling in Colorado. You're traveling in California. Hope you guys have a great weekend. You ladies have a great weekend, safe weekend. Dave and I come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. You know what is interesting, man? Hey, Dave. So when we were talking about the S&P, folks, you know, the S&P had closed the futures at about 1920. That was at 4 o'clock. But when they actually closed, they closed at 1916. Yeah. Right against that little pop from this morning. That's pretty sick. These numbers, folks, they're hitting these numbers left and right.
It looked to me like at least a little of the fund buying money was trying to come in today.
Yeah.
And my guess is, I mean, if they've got a little powder, they've got very little left on Monday morning now.
Oh, I'm telling you.
So you want to watch, you know, we've got fund buying the last 3 days and first 2 days of the month, and that's going to be it on Monday, whatever they got left, I think.
Amazing. Now, as we're going through this, Dave has a photo up that's pretty incredible. I never thought that I'd be intrigued with the smartwatch. But this is one of the slickest pictures I've seen. So talk to us about this.
Out of nowhere, HP's got a smartwatch, and it's using its own operating system. They're not either using Google's or Apple's.
Yes.
And they hired this very famous designer to put it together, and they're selling it through a very high-end online website, Gilt.com. They sell like high-end handbags, all the fancy stuff, right? But
folks, if you're driving, this thing is slick, man. It looks awesome. You can't even I can't see the face of it, but it looks like you put it off and just take off to the moon.
They're they're teasing it, right?
Yes.
But if I was going to say what it looked like, the new Star Trek spaceship, not the one from the 70s. This thing looks very spacey, very
I like it.
Very hot design out here. They decided to go with their own operating system, so they're going to be able to sell it to anybody that has a smartphone and hook back up to it, and they've optimized their own operating system for it. So who knows what it's going to do, but when we talk about Apple having the corner on design, there are other companies.
Not when you see this, folks.
Oh, this is hot.
That is one slick looking design. Okay, what do we get next?
Jack Pear, we've talked about some of these phone companies, especially in Switzerland, getting into encrypted phone calls, encrypted smartphones, and everything else for people to use. One of the hot things out, probably over the last 7 days, is this company called Jack Pear. And basically, it's just an inline thing where you take your regular ear pods with a microphone, plug it into one side, plug it into your phone, and it's encrypted. You just have to have one on each side, where these guys in Switzerland are trying to sell a $600 smartphone.
Okay.
These things are going to be about $100 a piece.
So if you and I were talking, we'd each need one of these, right?
Right.
And that way it would stop the NSA from picking up our conversation. Maybe not the NSA, because they have everything.
Yeah, they're going to be able to break it.
It would be the normal
if you're a
crook or
corporate,
something.
if you're a corporate guy.
Right.
If there's not a nation state on the other side,
That's
like
cool.
the KGB,
Right.
you're probably going to be okay.
Right, I got it. Perfect. Okay, cool.
So, but anyway, that has come down.
Jack Pear.
I think that those are going to be hot in the coming year, at least that sector out
Now,
there.
next one you got. I read a little bit about this this week. Search warrants apply to overseas computers.
Right. A judge ruled this week
Yes.
that in a case where Microsoft had data in one of their offshoots
in Ireland,
Ireland, that because they gave them a warrant here in the United States, it applied to Ireland. And this has never been tried before. They did say that they were going to give them 30 or 60 days to appeal it. But if this goes through, this means that any U.S. company is dead in Europe. As far as I'm concerned, nobody would use a company in the United States where any judge could say, hey, I want to see what data was in that, and then it would become out and become public in a court case here in the United States.
I see what you're saying. So the original, the Microsoft is fighting the government on this, folks, and the Microsoft was saying that, hey, listen, our constitutional rights was saying that
end at the water.
Your email, my email, is protected under the Constitution. What the Justice Department is saying, folks, is that because we put them in the cloud,
right,
and no matter where they are in the cloud, they're not protected any longer because now they're business documents.
Correct.
Right, which is a gaffe. And just that really can lay a basis, folks, so you can understand how the government works against people. You know,
I think it's a stupid idea on the government's part, because I'll guarantee you that if I ran a big company like Siemens in Europe,
sure,
and I was thinking about using Microsoft products,
right,
I would know that at any point a judge could say, hey, I want all the documents for Siemens, and you've got them. So you can't do that as a company.
And that's not just going to be Microsoft. That's going to be any documents inside the cloud.
If this stands,
right.
If this stands,
that's going to be any documents inside the cloud.
This means that a subpoena could be issued in any country in the world. And to this point, we've always dealt with those countries and say, hey, we need this data, and they get it for us, right?
Yeah.
On a case-by-case basis to see whether it's really necessary. This is saying that Microsoft, we're going to fine you if you don't give us this data, whether or not they fine you over in Ireland, because especially in places like Switzerland,
yes,
they can put you in jail for 10 years for doing exactly what the court is telling them to do. So Microsoft's going to be in a catch-22 where if they did do it and the person was in Switzerland, they could take executives and throw them in jail. So it's not just a tiny bit of a problem.
Yeah.
This is a monster problem for U.S. high-tech companies.
When you look, what has happened, folks, okay, one of the targets in the den say we're in the post-constitutional era. You know, I wouldn't necessarily agree with that. What I would agree with, though, is that they, meaning the establishment, is trying to take away rights on a continual basis. And if you think that that is, like, far out, all you have to do is go right into the aspect that, you know, this week that the CIA absolutely did apologize for basically getting in the Senate's computers. That is one of the most...
Did you see the video of the guy berating him?
I didn't. I mean, you know, this is serious business,
This is a senator saying, you need to resign right now.
Yeah.
And he said, you got it in our computers, you lied to us about it in front of Congress, and you lied about it, resign. And he's kind of like staring at his feet.
Yeah,
what
Brent is not going to resign.
Yeah.
And, you know, our man Terry in the den says spy versus spy. And that is the trip. They're all vicious. It's insane. So the next video, slide we have up there, is a great tablet crash.
Right. The Best Buy CEO, Hubert Jolly, came out this week and has said that they sell Apple,
yes.
They sell Android, they sell everything. He says that the tablets have literally crashed. I mean, he's seeing 20% of the demand that he saw just a few months ago.
Right.
So it is absolutely monstrous downturn in tablets, and a lot of people have been discussing it. But the question is, and I guess the arguments go along this line, the tablets really haven't changed that much since they came out.
Right.
And when you get a new phone, there's been this issue of, well, I had a 3G, now I got a 4G.
Yes.
I got a small screen, I got a bigger screen.
Right.
Well, 12-inch screens to 6-inch screens have now been available for 3.5, 4 years.
Yes.
The question is there what is going to move people from just hanging on to the ones they have and going on? On phones, there's a little bit more of an issue with the 3G to 4G, big size screens that you can see. A whole lot less issue with the tablets, and that has made a huge dent apparently in Best Buy sales. But he just doesn't see the idea where people are going to be refreshing their tablets every 2 years like they do their phones.
Well, this is a great topic because I have my phone on me right now, right? And I had Leanna in the office today. We have 4 phones. And I said, you know what, call up and find out what we can upgrade to. Because we have all these and I think we're all into an upgradable deal right now. And the reason I did it is that I'm using my phone more as a computer all the time now. I mean, like hours per day, not a small amount. Because what happens, folks, is that inside the context of being in the financial business, you get everything on it. But inside the business of the real estate business, it's amazing how much I can have on this phone. If you've never seen some of these apps they have out here for real estate, they're unbelievable. What you have is that you can take a picture. I can get down the street, take a picture of a house, and it can tell me flat out what it was sold for, what the house. This is immediate too, by the way, folks. What it sold for, what the houses around there sold for, and what the square footage is. Because I'm always looking at what is the square footage in the neighborhood.
So you can go to the houses next door to the ones you're looking at and figure out.
Listen to this. No, it's even better. You hit if I hit this house, let's say I hit 412 East 7th Street, right? Mm-hmm. It's going to tell me what the square footage of that house is, what they figure, if it's for sale, what it's going for. Then what it gives you is the houses that have sold within 5 or 6 blocks of that area per square foot. It's immediate. And that, they're taking...
Is that just for retail professionals, or is that for consumers?
That's what's consumers too.
Okay.
Yeah, it's insane. And they're using the GPS in your phone
to tell you where you're at.
To tell you where you're at. They can pull the information that quickly. Isn't that amazing? I mean, it's so. And then what we also use, I use Home Away when we rent these short-term
My
units.
point was just 3 months ago it was the end of the PC. Now it's the end of the tablet. Everybody's like hop-skipping around, trying to tell everybody what's over. Tablet probably less important than upgrading your PC.
Stay right there. Dave and I come right back, folks.
Andy Hecht's powerful weekly newsletter, the Technamental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technamental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technamental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien. Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, at TFNN, folks, we stream 24 hours a day, all our content. It's live content from 8 in the morning to 6 in the afternoon. We have a new show with our man, Mr. John Logan, that picks up at 8 o'clock in the morning. My hour is now 3 to 5 Eastern Standard Time. Of course, Dave is on 2 to 3 every day. We're looking at the slide Dave has up here. Android, bottom.
Uber alles. Overall.
Overall. Is that what that means?
Oh, you don't know your German?
No, I don't.
That's their national song.
Okay.
Deutschland über all. Anyway.
Thank God you're in the finance business, not a singer.
Singer, yeah.
So look at those numbers. Is that saying that they have 85% of the shipments going out right now?
Yes.
Android.
And it has Android as an operating system going on it. That includes a few phones this quarter from Amazon, but mostly everywhere else in the world has really taken on. And one of the things, the Xiaomi, which is Xiome, if you see him talking about it on television, it's pronounced like show me, right?
Yes.
Is the big company where the guy left from Google and went to China and fired up the big company, and it's growing like a weed.
Really?
Yeah. It's a huge, I mean, he's selling millions and millions of phones already. They came out with a new MI4 version that's a very slick phone. But he's in China. He's selling in China. They're going for Androids, and the thing's growing every quarter by 50, 100%.
Wow.
But they're selling millions of phones. And Samsung's been complaining. I haven't been able to pick up and go through my email or my news without seeing a day go through where Samsung's not saying that their sales are way down on the superphone business. And a lot of these guys like Samsung and Apple were hoping that China would actually get in there and buy a lot of Apple phones and buy a lot of Samsung phones, right?
Yes.
These guys are really starting to corner the market, and it is an Android device.
So but Samsung sells Android devices too, right?
Right.
Yeah, right. But they build them for Apple too.
Right.
Yeah, that's right. Thanks.
Okay.
That's that disconnect. I see what you're saying. Okay, right.
So the
Samsung factories, right, build a lot of Apple phones. Yeah.
Well, they build the memory, they build displays, everything else.
I got it. Okay.
So one of the things, though, is that these numbers really show a lot of growth in China.
Yes.
And those people are buying Android for the first phone now. They are not waiting for the next iPhone to come out this fall. And a lot of times being first is a big issue.
Oh, it is.
And this company being a Chinese company and a guy that worked at Google,
totally
right?
Makes sense.
He understands how the Google way of getting into and selling Android, and he understands the Chinese way of doing business in China.
Sure.
So they're doing real good.
Good combination.
But you look at Apple's market shares down to just under 12% from 13.5% a year ago. So
now I remember a couple of years ago when doing this show,
and it was 85-15, and it was 15 was Android.
Yeah. Just the opposite.
In 11,
because I remember we were doing a show. And you said this is the first time that it turned the opposite way.
When we went over 50%.
Yeah, right.
50-50.
That's amazing.
And that's been probably 18, maybe 24 months ago.
Yeah.
Maybe when it went 50-50. It went from 15% to 50% in 6 months.
Wow.
And
that's intense. And one of the main reasons, folks, is that Android gives away their operating system, right?
There's a fee for it, and of course they're trying to make money off of it. Yeah, but it's very, very small. And the whole idea behind Google was that they didn't want Apple to just run off into the sunset and leave everybody behind.
Sure, closed set.
The guy from Oracle,
Larry
Ellison, who paid to have that whole Art of War translated from the original Chinese and everything else. He's famous for saying this, and people really truly believe it in Silicon Valley. And it is not so much that we win as others lose, right?
Okay.
And the idea is that we couldn't let Apple get such a dominant position that they could control whether or not they saw Google searches. We can't let that happen. So they decided to go whole hog into this, and because they were so late, decided to just go ahead, we'll do it. It's not going to cost us all that much in the scheme of things. We can fund it. We're going to give it away, but it's going to make sure that Apple doesn't cut us off at the pass and cut off our water rights and all our cattle and everything starved. Right. So it goes back to just being competitive in the marketplace with their search.
Wouldn't it be cool if Google does the same thing with cable? No, seriously.
You mean cable, or do you mean internet?
I mean internet.
That's what I'm hoping. I would love to have that gigabit per second.
They're laying this gigabit across the country, folks, and it just totally makes sense when I look at what they're doing. It's like, why wouldn't you do it every big city and start it and just give it away? It's like, okay, because then you're streaming on their site and buying more ads or advertisers are. The next slide we're looking at, and the smartphone will tell.
Right. Now, Putin says that there's no Russians in Ukraine.
Yes.
Unfortunately, they're all taking selfies and posting on Instagram and Twittering, and of course their GPS signals are not turned off of their phone.
They're embedded.
And they're all in 10, 20, 30 miles inside Ukraine.
So underneath it, he says, on Wednesday, BuzzFeed's Max Sheldon found Instagram photos from a 24-year-old Russian soldier, Alexander Skokin, a communications specialist who appears to be based in southern Russia. His Instagram photos typically filled with selfies.
Right.
I love it.
So but of course, when you take a picture, most people don't know that embedded in the picture is a thing called XIF that has data like when it was taken and where it was taken with the GPS. Right? So you can decode them and find out. I'm sure he's probably long gone for it. But there's since that guy did it, a lot of other people went and started searching, and they're finding all these Russian soldiers doing selfies inside Ukraine.
Totally.
So the smartphone revolution is kind of interesting. I didn't want to go to this one.
The self-driving cars.
We're in Tampa.
Yes.
That we now have a connected car test bed in Florida. And I think while you were gone, maybe you missed it. But the FBI is warning against all these self-driving cars. They're sure they're going to put bombs in there and tell it to go to your house.
Really?
I hadn't thought about that before, but they were thinking about people using it as getaway cars. Anyway, there was this whole idea from the FBI about how dangerous self-driving cars are going to be. And I thought, well, that's kind of true. I mean, if you wanted to be a bomber and not blow yourself up, you just get in the car, tell it to go somewhere, and close the door.
That's intense, man.
And I hadn't thought about it.
Yeah.
But there's a lot of that. Anyway,
and so we had Audi.
Audi is doing it down here on, I think, off I-75 or on I-75. They were on TV this week with the governor showing it, but Audi's working on their self-driving cars out here, and I'm just wondering if they know how to look for that right turn blinker that's been on for 2.5 miles. How are they going to program for that?
Listen, folks, thanks so much, Dave.
You
really
bet.
Appreciate it. Always remember, folks, whatever you think about, you bring about, whatever you focus on grows. Whatever you want in life, folks. Visualize it, step in it, take ownership and fly with it. Thanks for being here. Look forward to speaking to it right here, Monday. Go get them, folks.